In this video, I want to go over what no one tells you about trading. And simply put, is that drawdowns are 90% of trading. For the past 30 days, I've been in drawdown on my own live results. And in this video, I want to go over my results, how I performed, how I recovered some of that drawdown, while also going over the key lessons that drawdowns have taught me in trading over the past 6 years. Now, first off, just to be transparent, here's my equity curve. I primarily do these videos every month, just give you a bit of a recap of my own performance. Also, mainly for me, I like going back on them and seeing how I've performed, also how I was thinking during that period of time. And now I've been trading for quite a long time of 6 years. It's always nice to look back because I think I've been doing these for about 2 years, maybe 3. I can't really remember, about 2 years or so. So as we can see, for most of the month, I was just straight going into drawdown. I think if we scroll down here, I peaked in drawdown at 10.49%. Which, at least for my portfolio, as I've mentioned here, it is an automated trading portfolio. So all of these strategies are fully algorithmic, meaning that they are doing the execution, the entry and the exits just via code. And I personally use NinjaTrader 8 platform, which is great for futures. So all these strategies here, you can see that have been blanked out in white. The reason being is a lot of these strategies, I very clearly label what they are. The reason being is I've backtested hundreds of strategies now. And one key lesson I have from that, especially if you're a developer, is you want to be as specific and clear as a label as possible. Because a lot of times when you're going back on strategies, it can take you a minute to remember, okay, what is this doing? Why is this doing this particular strategy? So I like to keep my labels very clear. But when I do these particular videos, obviously I blank them out just because I don't want to share all my strategies right now. Now, these are 9 total strategies I think that we're running this particular month. I have 10 strategies in total. They're a mixture between lower time frames and higher time frames, different instruments on futures like CL, ES, NQ, etc. I will say I have a slightly higher correlation to NQ and indexes in general, just because that's normally where the most volatility is. So there's the most opportunities there, at least for me, extracting trend or mean reversion. Now, my actual net P&L after commissions and obviously slippage, things like that, was minus 1.38%. So it wasn't a terrible drawdown, but as we can see from the equity curve, if I scroll up quickly, it was a very tough month for me. A lot of this month, I was just straight losing money. It was quite difficult on the psyche as well, but at least for percentage-wise, it was a very typical drawdown for my particular portfolio. My portfolio is a bit more aggressive. Obviously, it's leveraged because it's using futures. So normally, I can expect about a 10 to 15% drawdown if it is going to be a drawdown month, and this lands pretty much, right spot on. In total, there was 350 trades. As we can see, the trade count definitely varies because some of these strategies are low time frame, higher time frame, etc., like swing strategies. But I will say most of this month was saved by this one mean reversion strategy here. It gave me 6.66%, which is pretty incredible for a single strategy to pull it off. But what's even more crazy about it is it primarily came from one day. Now, obviously, it did take 50 trades. I'll show you more stuff in just a second. But pretty much every other one of my strategies was losing or break even this month. And I'm going to go into some particular reasons why that could be, and if I'm going to actually make any changes around that. Now, next, I always like to show you my correlation. So this is based on profit and loss. You can also generate other correlations based on open positions, drawdown, etc. At least just for these videos, I think the easiest one I spin up is just profit and loss. So we can see for the most part, everything is quite uncorrelated. Now, why do you want uncorrelation? It's primarily because we're trying to take advantage of the holy grail. I'll put that in quotation marks, but primarily that is coined by some of the biggest hedge fund managers like Ray Dalio and Jim Simons, where to get more stable returns or better risk adjusted returns, you want multiple strategies or trading multiple instruments, or in the case of like value investing, for example, you're trading a lot of different tickers, but at least in algorithmic trading, that's normally through multiple different strategies or multiple different signals, meaning you could have a trend following signal, which is obviously doing amazingly well during trending times, but will likely lose money during mean reversion times. But if you have a mean reversion strategy as well running at the same time, those kind of balance each other out and stabilize the returns overall. So that's what I primarily try and take advantage of in futures, and that's why I run 10 strategies. Now, obviously, this month only 9 strategies actually took trades, but for the most part, that's what I'm trying to take advantage of. So everything here seems quite good. So why was this such a terrible month for me? We'll keep on going through. So next, let's go over short and long trades. 30% of my trades were short-based and 70% were long-based. This is very typical as well for my particular portfolio. At least in futures trading, it's a lot harder to find solid short signals than it is for long-based. Now, obviously, that's because most indexes obviously trend up higher over a long enough time horizon. So most of the P&L you can get is going to be normally from longs. Now, you do want a bit of diversification in there. That's obviously why I have short signals, but they're never normally the top performers. And in this month, that is definitely true. If we look at P&L based, green is long and short is red. And as we can see here on the left-hand side, basically all of my positive returns came from longing, and my whole drawdown this month came from shorting. I lost about 7.5% just shorting alone, which is never really a great sign. Now, if we take a look at the NQ market during this period, so this is for the month of July, we can see for the most part, we sort of trended up higher, but there's one key thing you'd want to notice, and it's mainly that the wicks on these particular candles, this is a daily chart, are quite wide and will quite mean reversion, meaning that we'll get days like this where you'll open up basically at the same level as the previous day. You'll make a huge move down and then you'll recover that whole move and then come right back up. So if you're doing a trend following system during that time, your trend will probably detect it as a short, depending on your signal. And it will, be in profit for a bit and then it will completely reverse and close out your trade. And this kind of maintained the same sort of attributes during this whole month. We were trending up higher, which is why some of my swing strategies didn't perform that bad. They didn't do huge P&L either, but they did okay. But a lot of my intraday strategies, especially trend following wise, got completely crushed. But as we can see here, there's one day, and it's actually on the last day of the month, the 31st, where pretty much SPY gapped up, or NQ, pretty much all index gapped up, and then reversed the whole day. And that's where a lot of my recovery in P&L, if I just scroll back up real quickly, that you'll see has been recovered. So the end of this chart, you can see there's a very big spike at the end of it. And this is pretty much all from that day of recovery. Now, why was that? It was pretty much that my mean reversion strategy went short on that day, and it recovered a lot of the P&L. I also had some trend following strategies join it that day after the trend had been established, and also was able to capture some P&L, but it wasn't as much as the mean reversion. Now, if we also look at NQ intraday, we can see here the same pattern sort of continues like I was describing, where you'll get a gap up during kind of pre-market hours, and then it fades the whole way, and then we get a bit of trend following for a bit, still very huge fake outs here, and then we'll kind of continue up grinding higher, reverting some, grinding up higher, huge move, then revert the whole thing back. So this has been sort of consistent price action in the past maybe 2 months, 3 months, give or take, ever since really Trump has been in administration with all the tariff news. Now, last month was an amazing month for me, so I'm not that overall fussed about this particular month being about a 1.3 or 1.4, sorry, drawdown. What was mentally tough was that last month I was up about 12%, and during this drawdown, obviously I went down into a 10% drawdown, meaning I pretty much gave away all my returns of the previous month, which is always one of the hardest things I'd say on the psyche, is that when you have a record month or a very good month, and then the next month you pretty much give it all back. And that's very typical for a lot of trading strategies, especially in the trending markets. It's definitely been apparent in crypto recently. So it's just a part of the game. And that's why I wanted to title this around that. No one really tells you that most of trading is drawdown. Kristen Kulamagi, which was a prolific swing trader, and he was one of the biggest taxpayers, I believe, in Switzerland or Sweden. My apologies if I get one of those wrong. But he mentioned on a podcast how 95% of the time, his equity curve is in a drawdown. And for a lot of trading strategies, unless you are exploiting a very solid inefficiency, you will be in drawdown most of the time. It is not going to be clean all-time highs all the time. You'll often also get where you rush into all-time highs and then you give back some, and then you kind of chop it around for a bit and then you go again. But a lot of the time when you're trading, you will be in negative P&L, like you'll be down from your highs. So nowadays I try and not even really view these as drawdowns. I kind of just view it as the progress to continue to get higher returns, and I try and not view it as lost money, because ultimately, this money will come back to me if my strategies keep on working. It will just be over a long enough time horizon. And as we kind of saw, we got a bit of that at the end of this month, where a lot of my P&L was recovered from that one day. And it's also why automation is so important. If I had, for whatever reason, been manually executing all these strategies and I had given up on that day, I don't want to trade that day, I'm already down 10%, I'm going to take a day off to try and reset my psyche, I would have missed that day and not recovered pretty much all of my drawdown. And that's why personally, at least for me, I love automation and algorithmic trading, because I'm a terrible human executor of trading. I'm great at developing strategies, I'm great at testing them, I'm better at thinking long term, but trying to make decisions on a daily or intraday basis, I'm terrible at. So that's where I let the computer kind of do all the rest of it. Now, to kind of really bring this home, I know I've shown this chart in other videos, but this is Dunn's performance. He ran a huge trend following hedge fund, and he pretty much beat the SPY over multiple decades. But a consistent thing through it was that he had drawdowns that lasted a couple of years sometimes. Now, if you really think back, sit back in your chair and think, could you handle being, in a drawdown for 1 year? It's a very difficult thing to do. Waking up every day and you're further into drawdown, or waking up and you recover a bit and then the next day you lose it again. It's a very difficult thing to mentally withstand. And that's why a lot of the best funds are automated in some essence, because trying to manually execute that every day, it can be very tough, especially on the retail side as well. But that doesn't mean he was a bad trader or he had a bad strategy. It's just the reality that no one likes to paint you in trading, is that most of trading is going to be a drawdown. And then you'll get nice peaks every once in a while that kind of bring you to new all-time highs. Also, this is true pretty much for most instruments. This is just a graph kind of showing different instruments with trend following models applied to them. So for example, shorting USD, longing USD, bonds, equities, and commodities. Now, obviously, the strongest trend following models are always going to be in equities and probably bonds as well for the most part. And as you can see here, those are the two highest performers. But when you look at all of these equity curves, they have very consistent long drawdowns for periods of time. Now, obviously, once momentum is really catching on, you get really nice new all-time highs. Maybe for a week or two, you're kind of consistently breaking them, but then you'll go into a month long or whatever sort of drawdown. And then finally, to end this off, I've also been trying out a new DEX on crypto. So I've also been trying to run some crypto kind of like models, and a DEX is like a decentralized exchange pretty much. If anyone's wondering, it's called Lighter. It seems quite decent from my testing, and this was my kind of P&L over the past week or so. This was like a week or so into last of July. It wasn't really big size at all, but it was fun kind of testing out, so I thought I'd show it here as well. It is a good reminder when you are in a drawdown, sometimes experimenting with new things or testing out stuff on small size for your particular portfolio is a great way to distract yourself. Patience really at the end of the day is just distracting yourself doing another activity while you're waiting on the other one. So when in tough months like this, I try and distract myself the most, whether that be doing more coding, testing out new ideas, all that sort of stuff. Because ultimately the pain will end at some point, but you don't know how long. So at least for me, this was 30 days pretty much of just straight pain. And then at the tail end of this month, I got a nice recovery, and that was great. Now, will I continue being drawdown next month? Let's see.